Good morning. This is Japanese Economic Review Channel. Today is Tuesday, August 11th, and the domestic market is closed for the Mountain Day holiday. We bring you a comprehensive recap of yesterday's dynamic market movements on Monday, August 10th. Beyond the raw numbers, we analyze how shifting macroeconomic forces drove selective sector rotation and altered liquidity dynamics right before the holiday. Let's review yesterday's key metrics. The Nikkei 225 surged by 1,363 points to close at 66,970, marking a massive three-day rebound. Topix gained 25 points to reach 4,100, extending its winning streak to 5 days. Meanwhile, the yen showed a slight weakening trend to the 158.30 level, as the previous Friday's U.S. market surge provided a strong tailwind. The primary driver for yesterday's rally was the U.S. employment data from Friday. July non-farm payrolls dropped unexpectedly by 23,000. This economic cooling successfully eased aggressive rate hike fears, fueling a Nasdaq surge of 342 points. Global leaders like SpaceX, microchip technology, and Qualcomm led the tech sector's strong buying. Yesterday's intraday curve showed contrasting halves. In the morning, Nikkei inherited the U.S. tech rally, peaking at 67,006 at 10:53 a.m., its first time back in the 67,000 range in 3 weeks. However, the afternoon saw a major lull. Ahead of today's holiday and the summer Obon vacation, active trading paused as participants avoided chasing highs due to low liquidity. Despite the quiet afternoon, overall trading volume yesterday was immense. Prime market volume reached 2.548 billion shares, with a massive turnover of 9.19 trillion yen. Market breadth, however, was highly concentrated, with 916 advancers versus 603 decliners. This indicates that capital did not lift all boats. Instead, selective buying on fundamentals was key. Of the 33 sectors, 18 rose while 15 fell yesterday. With U.S. rate hike fears cooling, funds flowed heavily into interest-sensitive growth and resource sectors. Services like OLC and Recruit, and precision instruments like Terumo rose. Conversely, traditional interest rate hedges like insurance and oil and coal faced profit-taking and outflows. Individual prime stocks experienced sharp divergence yesterday. High-conviction buying boosted Harada, UT Group, and Sysmex on robust earnings prospects. Digital Hearts also jumped. On the other hand, CyberAgent and Mitsubishi Gas Chemical faced downward pressure. This highlights a market pivoting sharply from general index buying toward alpha generation. Yesterday, the growth market also responded positively to lower interest rate expectations. Forward-looking tech names like Waku, Feature, Enachange, QD Laser, and Go saw strong buying as risk-on sentiment returned. However, selective screening was severe, with Susmed and Serendip closing lower, indicating that fundamental viability remains critical. In corporate news from yesterday, innovation continues to drive equity stories. Takeda secured a milestone approval for its narcolepsy type 1 treatment. Rakuten upgraded its enterprise generative AI services using Anthropic's model. Meanwhile, Marudai Food initiated joint biological gravity research with JAXA, paving new frontiers for future biotech. In infrastructure, Kawasaki Heavy won a new helicopter order from Fukuoka City, and Tokyo Metro scheduled key timetable revisions. In consumer goods, Weather News launched its global weather app, while Sekisui Chemical expanded its global footprint by opening a high-performance plastics design center in Shanghai to target local demand. To synthesize yesterday's dynamics, first, bad U.S. labor data acted as a positive market catalyst. Second, the domestic rally focused on growth sectors, rather than broad-based buying. Finally, holiday season liquidity capped the afternoon momentum. During today's market closure, we advise preparing portfolios for high-quality secular growth. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.